Hello and welcome to The Explainer. Today we're jumping into a massive question facing thousands of Vancouver homeowners. Is now the time to refinance your mortgage? If you've had an eye on interest rates, you know this is a hot topic, so let's get right to it.
So, this is it, right? The big question. And look, it's about way more than just chasing a lower rate. This is a strategic financial decision. By the end of this explainer, my goal is to give you a clear framework to decide if it's the right move for you.
Okay, let's dive in. This number you're looking at, this is the whole reason we're having this conversation. It's the Bank of Canada's new overnight rate, and it is a huge drop from the 5% we were all looking at back in 2024. This one change is causing borrowing costs to just tumble, and it's opening up a massive window of opportunity.
So first up, let's get the fundamentals down pat. What exactly is refinancing, and more importantly, why should you even care? Let's take a look at the real power this can put into your financial toolkit.
The key phrase here, the one you really need to remember, is before your term is up. This is not your standard penalty-free renewal. Refinancing means you are actively choosing to break your current contract early to lock in a new, better deal. Now, that gives you a ton of power, but as we're about to see, it also comes with a price tag.
So, why would you go through all the trouble? Well, it usually boils down to one of these four big reasons. Getting a lower interest rate is the no-brainer, of course, especially if you locked in when rates were sky high. But accessing your home equity, particularly in a pricey market like Vancouver, can be an absolute game changer for renovations or investments. Consolidating debt? That can save you a fortune. And sometimes you just want to switch things up, say, from a variable to a fixed rate for some good old-fashioned peace of mind.
I love this point because it's just so powerful. I mean, think about it. Paying 20 or even 30% on credit cards is like trying to fill a bucket that has a giant hole in it. You're just pouring money away. By rolling that debt into your mortgage, you're plugging the hole. You're swapping that killer rate for your much lower mortgage rate. The difference in what you end up paying in interest can be, well, staggering.
All right, we've talked about all the exciting upside, but refinancing isn't a free lunch. Now it's time for a reality check. We need to get real about the costs, because they can be significant, and frankly, they might change the entire calculation for you.
And here it is, plain and simple. If you want to break that mortgage contract early, your lender's going to charge you for the privilege. This prepayment penalty is almost always the single biggest expense you're going to face, and it's there to basically pay the lender back for all the interest they're now going to lose out on.
Now, you absolutely have to understand this part, because not all penalties are created equal. If you've got a variable rate mortgage, your penalty is usually pretty straightforward. 3 months of interest. It's predictable. But, and this is a big but, if you have a fixed rate mortgage, you could be facing the interest rate differential, or IRD. And this thing can be a monster. It's designed to cover the bank's lost profit, and it can be massive. We are talking tens of thousands of dollars. Your absolute first step should be to call your lender and get an exact penalty quote. No guessing.
And yep, the penalty isn't the only cost. On top of that big number, you also have to budget for these other fees. You're going to need a lawyer for the paperwork, an appraisal to confirm your home's current value, and a discharge fee to pay off the old mortgage. All in, you should probably plan for at least another $1,500 to $3,000.
Okay, so you know the potential benefits, and you know the very real costs. How on earth do you decide if it's worth it? Well, this next part is the key. We are going to talk about the break-even point. And I'm telling you, this is the single most important piece of math in this whole process. And here's how you do it. It's a simple 4-step process. First, you add up all your costs, the penalty, the legal fees, everything. Second, figure out your monthly savings with a new, lower payment. Third, just divide your total costs by your monthly savings. That final number you get, that's your break-even point in months. If you plan to stay in your home longer than that number of months, you come out ahead. It's that simple. All right, let's shift gears and talk about one of the most exciting parts of refinancing, especially in a market like Vancouver's, accessing your home equity. For a lot of people, this isn't just about saving money month to month, it's about unlocking the wealth that you've already built in your home. So, how much can you actually get your hands on? The rule in Canada is pretty simple. It's called the 80% rule. You can borrow up to 80% of your home's current appraised value. Just take that 80% number, subtract whatever you still owe on your mortgage, and what's left over? Well, that's the maximum amount of new cash you can access.
And just look at these numbers. This is precisely why this is such a big deal in Vancouver. With prices this high, anyone who bought even just a few years ago is likely sitting on a massive pile of equity.
Even a condo owner could have a really significant amount of capital that they could tap into with a refinance.
So we've covered the what, the why, the costs, and the opportunities. Now it's time to bring it all home, to put it all together and figure out if refinancing right now in late 2025 actually makes sense for your specific situation.
So think of this as your personal checklist. Does this sound like you? Is your current rate at least, say, 0.75% higher than the new rates out there? Do you have more than 20% equity? Is your credit score solid? And most importantly, have you calculated your break-even point and you know you're going to stay in your home longer than that? The more of these boxes you can check, the stronger the argument for refinancing becomes.
Of course, just because the math works out on paper doesn't mean it's a done deal. You still have to actually qualify. And lenders are going to look closely at your credit, your income, and your ability to pass that mortgage stress test. The bottom line is, you need to have your financial house in order before you even start the application process.
And that really brings us to our final thought. For most homeowners, your property is your single largest asset. It holds an incredible amount of financial power, and refinancing is one of the most potent tools you have to manage that power. So the real question I want to leave you with isn't just about this one decision, but about your bigger financial strategy. Are you making your home's value work for you? It's a powerful question to think about. Thanks for joining us.